Welcome back, focused learners. Today, we're diving into something absolutely crucial for financial management. We are unpacking the structural blueprint for J.D. Edwards' EnterpriseOne General Accounting. Let's just jump right in, because getting the setup and the core processes right here, well, that's literally the difference between making the software work for you or you working for it.
So think about this for a second. How do you actually turn a blank software slate into an automated financial powerhouse? Because out of the box, enterprise software is, kind of a blank slate. You've got to think of this implementation as building a highly automated financial house from the ground up. You can't just start throwing data at it on day one. You have to pour the foundation, frame the walls, and run the plumbing first.
To do that, we're following a strict construction schedule for this explainer. We'll start by laying the accounting foundation, then move into processing core journal entries, automating allocations, mastering bank reconciliations, forecasting budgets and cash, and finally, wrapping up with system integrity and closing.
All right, kicking things off with Phase 1, laying the accounting foundation.
Before a single transaction is ever processed, you literally have to pour a concrete foundation of system rules. Based on our source material, the chronological steps to build this involve setting up your fiscal date patterns and business units, creating the chart of accounts, and configuring your general accounting constants. Getting these sequential steps right is a huge deal because it ensures the system perfectly mirrors your actual corporate structure.
When you're configuring those foundational rules in the general accounting constants, you're setting up the master logic for your system. For instance, requiring batch control, which just means the system will verify your expected totals against your actual entries to keep you honest. This is also where you dictate exactly how intercompany settlements are handled. Basically, it provides the fundamental framework for how the whole shebang behaves.
Once your constants are locked in, you move right on to AAIs, or Automatic Accounting Instructions. And honestly, this is where it gets fun. You can think of AAIs as the electrical wiring of your financial house. They define the rules for your chart of accounts and establish exactly how the system creates automatic entries. You're essentially telling your data exactly where to flow, completely without manual intervention.
Let's look at how some of that AI wiring actually works in practice. Take GLG1, for example. This dictates your general purpose accounts, acting as a master template that's only set up for company 0000. But then look at GLG4 for retained earnings. Because those earnings vary across the board, the system requires this specific wiring to be set up individually for each and every company. It's highly customizable. Moving right along to Phase 2, processing core journal entries. With the foundation poured and wired up, this phase is like the framing of our house. It's your daily operational process. J.D. Edwards handles these transaction batches using a really reliable 3-tier process: enter, review, and post. This bite-sized, step-by-step structure guarantees data integrity and bakes in managerial oversight before anything is permanently set in stone. Now, what I find super fascinating is the microprocess of what happens under the hood during that final post phase. It's essentially a massive data shift. The system grabs those unposted records sitting in the batch control records table, the F0011, and formally creates the posted records over in the account ledger table, the F911. That automated data journey, that's the beating heart of your daily operations.
Next up, Phase 3, automating allocations and burdening.
Okay, now we're adding some serious efficiency to our structure by automating how costs are distributed. The system gives you standard recurring journal entries and indexed allocations, sure, but the advanced variable numerator allocations, those are a real game changer. They dynamically distribute amounts. Imagine automatically splitting a massive fluctuating utility bill across a dozen departments, all based on shifting basis ratios.
Running right alongside allocations is burdening, which is your automated way to calculate those tricky indirect costs. But remember, process is everything here. Before you can even hit go on the Create Burdening Transactions process, you have to meticulously configure its specialized setup. That means defining your segments, organizing pool information, and dialing in your exact burdening rates.
All right, diving into Phase 4, mastering bank account reconciliations.
If your journal entries are the framing, reconciliations are definitely the plumbing. We absolutely need our data flowing perfectly between your external bank and your internal general ledger. Now, you could do manual processing, which, let's face it, is a fantastic way to lose your entire weekend to human error. Or you can leverage the system to process electronic bank flat files. Running those through the R9600 program automatically sweeps your bank data right into staging tables for auto-reconciliation. Boom, done. On to Phase 5, forecasting budgets and cash. With our daily and monthly processes structurally sound, it's time to look out the windows of our financial house and plan for the future. JD Edwards offers some fantastic flexibility here. You can use journalized budgeting if you need a strict, formal audit trail mapped to the F0911 table, which is absolutely vital for construction companies or government agencies. Or, if you want something faster, you can use spreadsheet imports to push data straight into the F0902 account balances table. And setting up your cash-type rules takes that forecasting to the next level. By configuring these rules properly, you're essentially forcing accounts payable, accounts receivable, and your general ledger to talk to each other. This masterful setup stops redundant data entry in its tracks and allows the system to predict your daily, short-term cash flow with incredible accuracy. Finally, we arrive at Phase 6, System Integrity and Closing.
This is it. We are putting the roof on our structure and doing some routine maintenance. Before you even think about closing an accounting period, your pre-close checks are completely non-negotiable. You have to run your integrity reports, specifically the batch header and out-of-balance reports. They verify that foundational tables like the F111 and F911 match up perfectly. It keeps the house from collapsing right before you lock the doors for the month. And when you do finally close, there's a very strict chronological timeline you have to follow. First, you close accounts payable. Second, accounts receivable. Only then, third, do you close the general ledger. AP and AR literally must always be closed prior to the GL to prevent disastrous, headache-inducing out-of-balance issues. Now, a really helpful, practical feature of this whole closing setup is how it handles different periods. Let's say a late entry sneaks in. In JD Edwards, a general ledger period can actually be manually reopened without forcing you to pry open AP or AR all over again. It's a huge time saver.
Well, we have covered a ton of ground in this explainer today, haven't we? From foundational constants and wiring those AIs, all the way to integrity reports and strict closing sequences. I want to leave you with this one thought. How much time will this automated, well-architected setup actually save your financial team? When you take the time to properly design the setup and process in JD Edwards right from the start, the return on investment in sheer speed and accuracy is absolutely massive. Thanks so much for learning with us today.